Hello, everyone. It's Joshua Barks here, Associate Broker at Keller Realty Boise. And here is this year's first video talking about the recap on what took place last year and then going into our predictions for this year. I hope everyone had a fantastic holiday break and fantastic New Year's. So let's just dive into these numbers. As always, we will have the chapters in the timeline below so you can go directly to the sections that are most important to you. And we'll start with these highlights. First off, home prices. Even though we're in a vastly different market than what we've experienced over the past several years, we still saw home prices appreciate. So we have a higher median and average sales price now compared to what we had at the beginning of 2022. So lower appreciation, which is expected to be kind of the new normal, but it is still appreciation. For both inventory and pending sales, we are low compared to what we typically see this time of year historically, even though right now we have 2.5 times more available homes for sale than we had this time last January. And lastly, the total number of homes sold, so sales volume, is down by about 20% year over year. So we had about 20% fewer homes sell in 2022 compared to how many homes sold in 2021. And we're likely going to continue to see that trend as well. I don't necessarily anticipate another 20% decline year over year from this year to next year, but it will likely be fewer homes are sold this year because fewer people will likely be moving. Let's start at the macro level and get into these national numbers. So first off, according to the Urban Land Institute, as well as several other sources, in 2023, the total sales volume is expected to be at its lowest level since 2012. And that is no shocker compared to what I was saying with our sales numbers here, down about 20% year over year. So we're expecting to see that trend. Rents around the nation will continue to outpace home prices as far as appreciating, so rents will continue to rise as home prices stagnate. This will likely lead to new record high rent levels. Mortgage rates are going to remain high, but experts have agreed we're not going to see double again. We started last year at 3%, ended the year at 6%. We're very unlikely to see 6% go to 12%. Hopefully I don't eat my shorts with that one. However, there is a lot of conflicting information on how high interest rates will go, if they'll come down, how much they'll come down if they come down. But so far, everyone has agreed that we will not see double-digit interest rates this year. The nation overall is still experiencing a supply shortage. So there's a shortage nationally for the number of available homes for sale compared to the number of people that need to move, want to buy, that are looking to move this coming year. And that's going to be continuing to be a problem as we move forward. Lumber and construction costs, however, are almost back to their pre-pandemic levels, which is fantastic news because that means builders will have their prices come down. It'll be easier to get into new construction and hopefully faster to get into new construction as well because supply chain issues aren't that big of a deal right now. So new construction will be a lot more comparative to resale homes. Home prices will continue to stagnate overall. So some areas in the nation are going to see dramatic gains. Some areas are going to see dramatic losses. It says most are going to likely kind of flatten out. We're going to see modest gains in some areas, modest losses in others, and just kind of even out across the board. So that's what's going on nationally. When we're looking at Ada County, taking it down to that micro level, but looking at what the national people are saying. So the Urban Land Institute has classified Boise as a magnet market. And a magnet market is an area that has a migration destination. It's for both people and companies. It's growing more quickly than the U.S. average in both population growth as well as job growth. And those markets are preferred markets for investors and home builders, as well as builders for commercial and hotels and retail and things like that. The magnet markets also have different levels to them, and Boise is what's under the supernova category. And a supernova is somewhere that has a population of less than 2 million people and has seen tremendous and sustained job and population growth, well above national averages. And Boise has ranked that for several years now. And that trend in 2022 is no different. It's above average levels on both economic diversity as well as the availability of white-collar jobs. So that provides, again, strong investor appeal, and that will ultimately sustain continued growth moving forward. So the Urban Land Institute, part of their 100-page report where they talk about many different metro areas in North America, so both US and Canada, Boise was mentioned as a magnet market as well as a supernova. For Ada County, when we're looking at the median sales prices, new construction is now at $635,000, which is up 21% year over year. This peaked back in October of last year at $639,000. So we saw the median continue to rise pretty much indefinitely, but it plateaued out in October and then kind of hovered in that high 630s and then ended the year at 635. When we're looking at the existing and resale home market, the median sales price is $540,000, which is up 7% year over year. And that peaked back in June at $555,000 for a median sales price. And so what we're seeing is if you combine both of those, median sales price across the board is $566,000, which is up almost 11% year over year. And that peaked back in July when it was $580,000. So we did peak last year, but we didn't see a dramatic drop off in prices like everyone is thinking, because you're seeing price reduction after price reduction after price reduction on the market. And that's just because prices are no longer skyrocketing. And people, sellers specifically, are just getting that wake-up call that they need to be more realistic, especially because mortgage rates are greatly affecting the purchasing power and availability there. Overall, the number of new construction homes sold, we had just under 3,000, but that was 14% less this last year compared to 2021. And for resale homes, we had just over 6,000 homes sell. That's down 20%. So total overall, we had just over 9,000 homes sell in Ada County, and then that's down almost 19%. Now, when we're looking at the market dynamics specifically, these focus on the average sold price. We ended the year at just about 6% more than what we started the year with. Average sales price in Ada County is now just over $609,000. Average days on market is 26 days and rising. That hasn't been moving dramatically, but I do anticipate as we go on into the year, we'll continue to see that number come up. The absorption rate, so the number of available homes for sale, if no new homes came on the market and they continue to sell at their current pace, we have an average of 1.5 months supply. And they say less than 4 months is considered to be a seller's market. In between 4 and 6 months is considered to be a balanced market. And then beyond 6 months is considered to be a buyer's market. So we're not in balanced market territory nor buyer's market territory. As you can see, most of the sales that took place last year were under 800,000 and above 400,000. So that's where the bulk of our sales take place. And again, we still have less than 1.5 months supply in all three of those categories. When we're looking at the number of active listings and kind of our trend, we have 2.5 times more homes available than what we had at this time last year. And yeah, we have lower pending, 284 compared to 500, almost half on the sales side as well, 358 compared to 675. But again, inventory, it peaked this summer and then has been coming down pretty steadily ever since. And if you're looking at the weekly numbers, inventory is still coming down, but demand just started to come up. And that makes sense. It's the new year. Our pre-spring selling season is starting, and that's kind of what we're moving into and looking forward to. With Ada County, we're likely going to continue to see inventory will actually start to come up, and then we'll see demand come up and sales come up. I don't think we're going to see a dramatic increase. We're going to have fewer homes sold total compared to what we've seen in the past, and that will make it feel like we're experiencing a lot less, even though that's not having a dramatic outlook on prices because we're still hovering around that plateau and what we're experiencing there is pretty minimal. Sellers need to be realistic on prices. We're no longer in that frenzy period, but we're not crashing either. Maybe we get to that point at some point, but we're not there yet, and it doesn't look like that's going to be happening in the immediate or near future. But we will probably get to a balanced market at some point this year for several price points. When we're going into the top 3 areas for Ada County in 2022, Star came in at number 1. The average sales price came up with a sales price of $677,000. In Boise's north end, so North Boise, which also is Boise downtown, average sales price $851 is up 11.5% year over year. And then Southwest Meridian was the number 3rd spot with an average sales price of $700,000 and is up 8.4% year over year. The biggest loser and the only area that actually went down in average sales price was Garden City. Garden City average sales price is now $539,000, and that's down 3% year over year. Let's get into Canyon County's numbers now. We have the average sales price in Canyon County at just under $437,000. We saw an increase of 8.5% last year. And when we're looking at the number of available homes compared to those pending and closed, we again have basically 2.5 times more available homes for sale right now than we had this time last year, and half as many pending sales, 237 versus 136, half as many closed sales, 300 compared to 155. Basically half the amount of pending and sold with double the amount of available homes for sale. Now, we are seeing the number of available homes for sale declining, and we're starting to see that pick back up, and that will likely continue on into the spring. Holidays are our lowest inventory months usually, and then springtime is our busiest season. I don't anticipate higher numbers than what we saw last year because we're likely going to see fewer homes sell total overall. So our inventory is likely going to be more than last year, but less than what we normally see. So we're going to have demand come up, the number of sales will come up, but again, it'll likely underperform what we had last year. At the absorption rate, what we're looking at there, we have 1.7 months supply. So if no new homes came on the market and they continued to sell out at the pace that they have been for the past 12 months, it would take just under 2 months to have no more homes available. Now, if you're looking at the absorption rate for different price points, that's where you can really figure out, are we in a seller's market, balanced market, buyer's market? Seller's market is anything less than 4 months. A balanced market is between 4 and 6 months, and then beyond 6 is considered to be a buyer's market. As you can see, the bulk of sales that take place in Canyon County are right here, so between 300 and 500,000. When we're talking about the top 3 areas, Northeast Nampa came in first with an average sales price of $455,000 and is up 13.6% year over year. Greenleaf, average sales price out there, $485,000, up 13% year over year. And then Middleton came in third with an average sales price of $555,000 and is up 12% year over year. The biggest loss, the area and the only area that came down in Canyon County, was Melba. So we saw year over year, the average sales price came down 7.5% almost. But not surprising for an area like Melba, just some of the outskirts areas, there are fewer sales that take place. So any sales skew the data because we see huge gains sometimes in Melba because a house sold for $1 million. And so the average sales price shoots up. And then we have, one that sells for $300,000 or $200,000 and then it shoots back down. So I think it's kind of volatile, but that is the only area that came down year over year for Canyon County. Let's discuss mortgage rates. We started the year at 3.22% and ended the year at 6.42%. They doubled last year. We peaked back in November, and we've pretty much been declining ever since. There have been a few weeks here and there that have gone higher than the week prior, but luckily the volatility, according to them and some other reports, is that last year's rate increases are not going to continue as dramatically as we've seen. So rates peaked back in November. They've been pretty steadily declining ever since. According to Lawrence Yun, the chief economist for the National Association of Realtors, he has indicated that rates are likely going to continue on a decline for the near future, even though the Fed is going to be meeting soon and raising the Fed rate yet again. Rates overall, they're likely to remain high, and future changes are expected to be more modest. And the current mortgage rate as of Thursday was 6.33% for that 30-year fixed. So it did come down 6.42, and then we came down again last week, and then this week at 6.33. Compared to last January, buyers on average are paying $700 to $800 more simply because interest rates jumping from 3 to 6%. But because we have people in that 3% category, people are likely going to stay put longer. When we're looking at predictions, home prices will continue to come back to earth after a couple years of extreme price growth. However, we're not expected to see a dramatic decline in prices, even though I believe we've yet to see the floor for our area. Overall, I'm predicting that we'll see the average sales price stay relatively the same to where we are now, with prices either increasing or decreasing by about 4% by the end of the year, depending on what interest rates and what happens with the national economy outside of housing. For Ada County, we ended last year with about a 6% increase in the average sales price. I think it's most probable that we'll see less than that this year, but not by a considerable amount. It'll simply feel like prices aren't really moving in either direction. That being said, when we look at price reductions, we will continue to see price reductions across the board, as I anticipate many sellers will still have an overinflated idea on what their home is worth and will need to come back to reality. Also, because of mortgage rates, buyers are not going to be able to afford nearly as much. So there's significantly less wiggle room on price than what we've experienced over the past couple of years. Sellers will have to give more concessions, they'll be paying more closing costs, doing more repairs, and things like that. So it is a great time to be a buyer and enter into this market, even though inventory is still lower levels than what's needed for a true buyer's market. We are very unlikely to see the absorption rate surpass that 6-month supply mark, which is what's needed to be considered a buyer's market, because right now we're still less than 2 with about 1.5 months supply. However, I do anticipate that we'll probably reach what's considered a balanced market, so about 4 months supply at some point this year. It'll probably be late this year, possibly late summer, but we'll still be very solidly in the seller's market category for the near future based on our absorption rate. If interest rates rise dramatically, which is not what people are saying is going to happen, but if they do, we will see the market edge closer toward a balanced market at a much faster rate than expected, since more buyers will be forced to drop out of the market due to affordability, and if that happens, prices will continue on a downward trend. Demand is going to rise. We have a lot of people moving into that prime buying age right now, and then people are seeing this as an opportunity, especially if you're thinking for long term. I'm not talking about someone that's going to buy something, flip it, and hope to sell it later for a profit, or somebody that's going to buy something, stay in it for a year, and then sell it. I'm talking about other investors saying that, man, 10 years from now, this is going to be a price that I will pray for. Because again, if you look back 10 years from today, you're seeing prices, the average sales price was in the 200s, which is amazing, considering today we're in the 600s. Real estate is a long-term investment. This spring is going to be considered another strong selling season, but again, we're going to underperform compared to the last couple of years as far as the number of homes that are sold. So there's going to be fewer pending and higher inventory than what we've seen. There's going to be less competition for things, but there still will be some competition because springtime is our busy season. But a lot more people are going to be staying put longer due to the refinance boom of 2020. This is going to tamper the inventory levels and lead to fewer sales. because if those people aren't putting their house on the market to move, they're also not buying something to move into. So we lost 2 sales because someone wants to stay put. So that's what we're predicting for 2023. But the question I'm still getting all of the time is, when is the best time to move? And here is my answer. The market is always shifting. Time in the market beats time in the market every time. So really, you just want to ask yourself, do you have a good enough reason to move right now? If you do, can you afford to move? Regardless of what the market is doing, if you're able to answer yes to both of those, it's probably the right time for you to make a move, as long as you're staying in it for the long term. And then 10 years from now, you're going to be looking back and saying, yes, I'm glad I made that move. But if you're unable to answer those questions, this is one of the places where we come in. So set up a no obligation consult with your favorite agent. We would love to be interviewed as well. That way we can show you how your unique situation fits into what's going on in the current marketplace, and then you can make an informed decision on what your next steps are. If anything, maybe that next step is to stay put. Meeting with us to discuss what's happening in the market, how your situation fits into that, and then if you need to, getting you set up with one of our lender partners to figure out the answer to, can you afford it? The best part about this is there's no cost to you. It's just an investment of your time with us. And like I said, there's no obligation. We're here to be a resource for anybody who needs us. So please reach out. That's what we're here for. So that is a wrap on the market recap for 2022, as well as our predictions for this year. I hope you enjoyed this video. Please leave a like, a thumbs up, and subscribe to the channel if you haven't already. We put out these videos on a regular basis, and we also want to hear from you. Let us know if there's something specific you want us to cover in future videos, or if you have any questions from this one, or just any questions real estate related. That's what we're here for. I make an effort to put these together to be a resource for you. So use that resource. Let me know what you need, and we will make it happen on our end. Thank you so much for being here, and I hope everyone has a fantastic day, and we will see you next time for Market Watch.